shift focus to commodities while we get Mitesh back on line with his trades, etc. Manisha, commodity-wise, I guess it's easy. I mean, oil, right?
Oh, yes. You know, Prashant, Friday was about 12% of gains on crude oil prices. Yesterday was about 5% of a decline in crude oil prices. So if you look at the overall trade yesterday, it was an $8 of a swing that we saw come in for the crude prices. Well, at one point in time, we were down 5%. It closed 1% on the lower side. In the Asian markets right now, we are trading in the positive when it comes to the crude oil prices. So very, very volatile moves coming in there. But I'll straight take it to the geopolitics, and that's where the major news comes in from and the impact on the crude prices as well. So to begin with, it has been about reports of Iran seeking to end, asking for a ceasefire as well, and asking U.S. not to get, interacted within when it comes to the fires there. But Israel, in the meanwhile, has vowed to more strikes. We also do understand via various reports on how Israel has struck on Iran's state broadcaster and the biggest uranium enrichment plant therein as well. In the meanwhile, you also have statements coming in from the U.S. President Trump urging everyone to evacuate Tehran. Well, that's about it. But the whole conversation has been about Strait of Hormuz when it comes to crude oil especially. And when you look at the ship's passage there, and this is the data that we are getting on a daily basis now, on 12th of June, it was 116 ships which are passing through Strait of Hormuz, and 15th of June shows 111 ships there. So we haven't seen much of a change come in the numbers, not yet. Apart from that, it was also to do with the OPEC monthly report that came in yesterday. OPEC has put out an important point forth that spot prices remain above futures. So we are trading in backwardation. The current prices are higher than what they're trading the couple of months ahead. That tells you that the immediate demand for crude and the premium therein has been on the higher side. The OPEC Plus also says that the global economy will remain resilient in the second half of this year as well. They're looking at higher crude prices in the second half than the first half. And apart from that, they also have put out the kind of production that they're anticipating. So according to them, the non-OPEC and the US production going forward is expected to decline in the second half of this year and in 2026 as well. The number that they have put out is 730,000 barrels versus earlier estimate of 800,000. So we're looking at slight decline in production outside of OPEC. I also want to take you through various numbers there. When you look at the previous year averages in sense of crude prices as compared to this year, we are much on the lower side there. So last year for Brent, the overall year average was $83. Currently, with what we've done in this year until now, it is at $71. Same goes for the NYMEX as well. Almost $79 of an average in last year, and we're trading at around 68 at this point in time. And with that, the last plate will show you on what we've done in sense of prices in this year of highs and lows. High for Brent this year has been 82 and 60 has been a low. We are trading at 74 currently. For NYMEX as well, even with all war conversation and tariff uncertainties, we haven't really come back to the highs that we saw in the month of Feb and March. So after 79 of a half and a 57 of a low, we are trading at around 70 at this point in time. Also, most analysts are telling us that $10 of a war premium is what the crude prices are carrying already with that. So if there is any ceasefire and any conversations, negotiations that happen, crude prices have a more chance of falling from here.
All right, Manisha, thank you very much. Let's hope that indeed does happen, that is, oil cools off, that the conflict's got to cool off as well.